Guys, let's do a quick market analysis of a trade that has already played out. All right, you guys know me. I like to keep things simple and straight. All right, I don't like to complicate things. A lot of gurus, a lot of trading mentors do complicate and use different words for these things, and I like to just keep it straight. And I think that's the best, keeping things straight as possible, so that other people listening to you, learning from you, can understand. All right, learn how to keep things straight and simple. Don't complicate trading. Trading is a very simple thing that you can learn, possibly from the right person, from the right source. All right, so let's keep things simple here. This is the trade has already played out, but I want to do a refresh analysis. Let's redo analysis on how I enter for this beautiful trade. All right, so let me take this out so we can do a fresh analysis on a clean chart. All right, so in every different trade I do explain different things. All right, because these are the things I experience on a daily basis from the market. And don't forget that things do repeat itself in the trading industry. The market always repeats, it always reoccur. All right, so don't forget this. All these things that we are seeing here do reoccur in the market. So as we are trading, we are putting these things in place, and you understand all these things I'm explaining. It's going to make you profitable because these things are working currently. All right, they are working. These are the things you see on a daily basis in your market. All right, so let's do a quick analysis. Right at this place, you can see clearly that the market is bullish. All right, the market is bullish. So like I said, it's either you are trading the bullish trend, trading with the trend, or you are trading against the trend. And I've always said this, I've been saying this for a long time now. If you are trading against the trend, you should be very serious, like taking profits quickly and getting out of the trade. All right, and getting out of the trade, because you will never ever know where the market will start retracing from. All right, you never know where the market will start retracing from. So be skeptical about the market, be fast in entering for the trade and getting out of the trade. All right, so this is a counter trade, by the way. We had the break of structure at this point. Right here. And after that break of structure, this was what price did that made me enter for the trade. So after the break of structure, price gave us this huge bullish candlestick at this point. This huge bullish candlestick right here. I think a news came into the market or something like that, but I knew that something fundamental caused this thing. I think it's like CPI news or something or thereabouts. All right, so after seeing this bullish move, I knew that here was my higher high. Here was my next higher high. At this point, it's my last higher high right here. So since here is my last higher high, all these things is not my business. All these things are consolidation. They are not my business. I have no business trading this. All right, I shouldn't be trading this because it's not among my trading rules. I don't trade consolidations because the market is going up and down with no clear direction. The market has no direction at this point. It's just consolidating. So I have no business here. All right, until I see some sort of shift of structure or a break of structure. All right, so at this point the market was consolidating, and I know for a fact that liquidity was right here, was right above this point. So anytime you see a consolidation like this, just know that liquidity is between, or should I say above and below the two sides. All right, above and below the two sides. So you see that those people that like trading the breakouts, those retail traders that love trading breakouts, they will enter for their trade at this point. Immediately price break past this high, they will enter for their buy order right here, which is very bad. All right, because the market will take them out. They enter for their buy order, immediately price breaks out because they are breakout traders. What's the meaning of this, man? Why is this shit so long? Come on, bro. Why are you doing this? What's this? Alright, let me do another one. Right here, like I said, there are breakout traders. So there will be traders entering at this point. What's the meaning of this? Why is it so long? Yeah, there will be traders entering at this point, setting that take profit somewhere above that high or whatever point they want to set that take profits, and the market will take them out. So you see that the market is stopping out mostly buyers and sellers in this trade, because there will be buyers trying to trade this breakout here. Yeah, sellers, not buyers, because the market has stopped buyers out. So there will be sellers trying to trade this breakout at this point right here. They'll be trying to trade this breakout without waiting for a retracement. This breakout, without waiting for a retracement. Maybe they entered at this point right here, because there are retail traders who do these things right here, and their stop loss is somewhere above this high. The market will stop the buyers out and also stop the sellers out. So you see that these things, you have to understand them, so you don't think that the market is tricky or anything. The market won't harm you if you didn't allow the market to harm you. So you tell the market, you give yourself to the market for the market to harm you, and the market is ready to teach you as much as you are ready to learn. I don't know if I said that right, but the main question there is that, are you learning from this thing that the market is teaching you? Are you learning from them? Are you learning from your losses? Are you learning from those losing trades? Are you learning from them? All right, so this was what I did. Let's go back to what I was saying, how I entered for this beautiful trade. So like I said, liquidity was above here, and also liquidity was below this point. Right here. So now I'm expecting something in the markets. I'm expecting either for this, after this break of structure, price will just retrace to this point, and I'll just take the buy if I see some sort of break of structure or shift of structure at this point. I'll just buy and trade with the trend. All right, I'll just do that and trade with the trend. But I see that, number one, price has not fueled this fair value gap completely. There's still liquidity below this point. Price has not covered this huge bullish move right here. That's first. Then secondly, I was waiting for something because I zoomed in like this. And I saw that this is the external break of structure to the upside. So price must retrace before continue going up. All right, at least at the 50% of the market, price will retrace to 50% at least before continue going up. All right, so I'm ready to trade that retracement. That is what I call counter trading, because I'm not buying, I'm selling. So I'm trading against the trend. So I waited. Remember, as the market, like I said, we all know that there's liquidity below this point. All right, I'm just going to take this out. All right, so I saw something. As price was trading upward, price gave us a higher high, a higher low, and throughout this period, price never broke past this high. So like I said, this is a consolidation. All right, until price broke past at this point. So this was our last higher low, because price is bullish. So this was our last higher low at this point. All right, and this was our higher high that has been broken because price has broke structure to the upside. All right, so I waited for a shift of structure, which I had at this point. Remember guys, the reason why I'm trading this counter trade is because price has broke structure from the external market structure. This is the external market structure. price has broke structure to the upside, and price will retrace to at least 50% before going up. All right, before going up. So I'm just counter trading for the meantime then. All right, so this was it at this point. Like I said, our higher low right here. So price shifted structure, and before price shifted structure, price gave us this mini supply zone here, this internal supply zone. And anytime we have something like this, like I have always said, say there's liquidity above this point. All right, because this is demand flipping into supply. Like we all know, the market was bullish, demand was in control of the market. All right, till this point, then supply took over. So this is like the internal supply zone here, and this is our flip zone, and liquidity is always above this flip zone here, so I waited for that liquidity sweep. And secondly, just like I have known, fair value gap was also close to the liquidity, to our flip zone. This is a huge fair value gap, and price must come testing at least 50% of it. It was just close. All right, so I waited for this to 10. Most times I like naming them. I might just put something like this right here. First of all, the market has swept my first liquidity, which was above this consolidation. That's first. Now the market has swept liquidity at this flip zone right here. That's second. And now the market has also covered this fair value gap. All right, so I entered immediately. I saw this huge engulfing candlestick. I entered at this point after the engulfing candlestick is done forming. All right, so I entered right here, and my stop loss was right above this high because market has already swept liquidity, so I'm free to put my stop loss there. All right, and my take profit was right at this point. Now I can target something lower than this, but I just like to keep it simple. Just keep it simple. All right, because you never ever know where the market will start retracing or reverse form, because this is counter trade. Like I said, you have to be fast in entering for the trade and getting out immediately. All right, you are not the market. You can't tell the market what to do. So just take your ass off the charts, enter for the trade, and just leave the charts. All right, be very fast, like I've said. All right, so let me show you another trade that has already played out also. Let's do another analysis. This is another trade that has already played out. All right, so I'm going to show you how I entered for this beautiful trade quickly. All right, so first of all, let me take it out. First of all right, so now let's do this. Like we have here in the external structure, you see that the market is bullish, or the market was bullish, because then when I was analyzing the chart, I was looking at for all these things. So I'm just telling you the things that I did. So the market was bullish going to the upside, and we have the break of structure, and the market is being bullish. So this is the external structure right here. Market is bullish, while my internal structure is this: higher high, higher low, higher high, higher low, higher high. So this is what I have to tell you guys. If you are trading using the internal structure, make sure your take profit is very tight. All right, just take profit within that same internal structure. Don't analyze your chart in the internal structure and then take profit in the external structure. Don't do that. Price will just reverse and continue going to your stop loss. Don't do that. All right, be very fast while you are doing a counter trade, and also while you are trading inside the internal structure. All right, but if you want to do a swing trade, you have to combine both internal and external structure. In fact, the external structure is more stronger than the internal structure. All right, so you do your top down analysis properly. All right, but I'm just showing you what I looked out for on the 15-minute time frame before I entered for the trade. All right, so the internal structure, I had higher high, higher low, higher high, higher low, higher high at this point. So this was, let me zoom in. Yeah, this was like my last higher high. Then so I marked it out right there until I see price piercing above this point with a wick, with a candle wick. So I know that price has swept liquidity above this point. All right, I have no business here anymore. All right, so just like the first trade, immediately we have, as we have already had this break of structure to the upside, we know that price will trace at least 50% of this fair value gap before continue going up. All right, even if there's no fair value gap here, price must still retrace, because price cannot go up in a straight line. Price will go up, retrace a little bit, go up, just like that. That is when we have a trend. All right, price don't go up in a straight line. All right, so I had this fair value gap here. Like I said, at least 50% of the fair value gap is enough. 50% of that fair value gap is enough. Don't be too greedy. All right, so I spotted out that 50% of the fair value gap, and I waited for my shift of structure before I can trade the bearishness. All right, I needed something to tell me that, boy, the market is now bearish, from bullish to bearish. All right, so as we had here, higher high, higher low, higher high, higher low. This is now a higher low because this huge candlestick is not piercing above this point. All right, it's not piercing above this point, so this is a higher low at this point. So I spotted it out right here. Higher low, last higher low right there. All right, so I had the break of structure. You can see this three huge candlestick piercing piercing below this our lower high at this point. Is it higher low or lower high? I think it's more preferable to be called higher low, because this low is higher than this low. All right, so it's higher low. So after that shift of structure, I waited for a retracement. Remember, this huge three candlestick is a liquidity. It's a huge supply that entered for the market at this point. So there must be a retracement to at least fuel it before price can gain strength to keep going down. All right, so I waited for that retracement, which I had here. Price retraced to cover the fair value gap, and I entered immediately. I saw these two bearish candlestick here, so I entered at this point right here, and my stop loss was above this high because I already had a shift of structure. All right, and my take profit was at this, my 50% of this fair value gap, like I have said. Yeah, right there. And as you can see, played out perfectly well. So it's as simple as this. All right, I know many of you will be saying that maybe I just drew all these things, but there's no way I can analyze these things for you if I don't know them. All right, and these are the things that do happen in the market on a daily basis. A random person can just draw something like this for you, but me analyzing these things, telling you how it's been arranged, all right, how I do my top-down analysis, or how I check out for these criteria before entering for my trade, you know that I know what I'm saying. All right, I can't just come out and just draw something. This is a trade that has already played out, and that is why I know what I did. I can't forget what I did. So it's good that I'm reviewing my trade after I'm done trading. So you see that you don't only review the losses, you also review your profits. All right, check out for the things that you did right and repeat them again. And if you lose any trade, you check out for the things that you did wrong and make sure you do not repeat them again. This is how you become consistently profitable, reviewing your trade. So as I'm analyzing the trade for you guys now, I feel like I'm reviewing the trade and I'm saying what I did. I'm repeating what I did again. And these things will not leave my memory because I'm repeating them and I'm saying it to you guys again. So it's taken in my head. So next time if I want to trade and I see a setup like this, I won't forget easily after saying all these things. So you see that me revealing my trade that has already played out, is also a good thing, because many people do trade and just clear the chart and just forget about the trade. But I review mine. I also review the losses, not only the profits. So go check my other trading videos and see that I do review losses also. All right, so this is the things I look at for before I trade. So make sure you are looking at for all these things if you are following me. All right, so this is how this trade went. As you can see, it was a beautiful trade, and I hope you guys have learned something. All right, and happy trading day and happy trading week.